Hi, welcome to the Market Alert for Tuesday, the 26th of May 2020. So going back to Friday, it's been the holiday weekend. We saw stock, silver, black gold, i.e. oil, and bond yields jump this week as dollar and yuan dump. So let's have a look at Friday's market before we do anything else. So going back to Friday, which is going to be this day, the market moved lower and then managed to close back above the 5-bar moving average. And then yesterday, just the electronic market for half a day session, this too moving higher. And again, you can see overnight prices moving higher, trading up to the 76% retracement of 24,951. We'll look at that in a bit more detail in just a moment. So let's have a look at Friday. And we can see the pre-market session, the market moving higher. We had the release of the UK retail figures as well, which were absolutely shocking, minus 18%. But 2:30, the US opened and continued to move lower, and then did the usual retracements, as you can see there, before attempting to move back to the upside there, which it managed to do before the market closed, which you can see there, before the holiday weekend. And then yesterday on the overnight, Memorial Day for the US, bank holiday, spring bank for the UK, the market once again moving higher and then retracing. And then as we drag across, you'll see that we had the afternoon session, was just a half session. And then overnight, you will see prices have moved higher. You can see there, trading up to here. We've got some selling, which ties in with this area here in the daily chart. So again, bit of a stop and breaks on the situation there at the R2 level for the Dow at the moment. As you can see, prices continuing to move higher. I'm just going to move the chart over now so you can see that we're still stuck in this sideways move. Will the market break out? Well, the 200 MA is going to be in the way if prices do break out. But there's a lot of thought at the moment that there is a complete disconnect from the market, which is something that I've spoken of a lot in the Market Alert Robobank. Quite a market disconnect has formed. We may be just weeks away from the levy breaking. So again, I wouldn't be at all surprised. I mean, there is a complete disconnect to the nearly 40 million unemployed in the last 9 weeks, plus the economy falling apart in every area, and yet the stock market has managed to move higher from the lows. As we went into the lockdown, the market has rallied back significantly, that we can see there. So we'll see how this pans out, but I wouldn't disagree with this. It's starting to look a bit tired as well. And considering how much money is being printed recently, this market is not responding on a weekly basis. We can see they're heading towards the 62% retracement, and the same in the monthly chart there. Meanwhile, in the implied volatility, this moving down, the lower this goes, the better if there's going to be a correction to the downside in the stock market before this can actually move back to the upside. But so this is also clustering there as well at the moment. This may be the sort of normal area, given the volatility that we've had recently. To get back down to these sorts of levels at 10% may take some time, especially if we see the underlying market move lower. But the bankruptcies continue as well. We've got bankruptcy tsunami begins, and again, this is also going to add to downward pressure in the market as well. It says the default letters from the landlords are flying out the door. So and to add to this, Hertz have gone bust, and the Fed has now picked up their corporate bonds, and this is what they've been printing money for and adding to the balance sheet. It said as of this moment, the Fed is an holder via BlackRock and via HYG and JNK junk bonds, of which are in default, and which make the Fed a part of the Hertz post-petition equity once it emerges from bankruptcy. So amazing. Yeah, so like I say, we've got the this other one as well, only a matter of time before, which we've seen already developing. And then finally, let's have a quick look at the Forex factor. We got the retail sales from last week, which we saw. I'll just show you the graph. If it will work, there you go. We got minus 18 for the UK as of the month of April. Retail sales minus, I think you say minus 18. Unbelievable. Highest on record there. So as we move forward, what have we got this week? Well, there's not a lot, to be honest with you. That's all medium impact. The only high impact, we've got the prelim GDP for the US on Thursday, 1:30 p.m. We've also got the unemployment claims. They're still showing another 2 million for this week. I can't understand why it's a medium impact news item, but yeah, another 2 million is forecast there. And Powell is speaking on Friday at 4 p.m. So not a lot of news this week, and it may give the market chance to move back towards the upside at the moment, as there is no sort of news. But it wouldn't take a lot to send the market to the downside. But I would be surprised if we don't have an attempt up towards the 200 MA before we see this happen. But yeah, not a lot of volume, and we need to break the resistance to the left here. Okay, that will do it for this one. Let's see what happens today as we settle into a new week of trading. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.